Hey there, welcome back to the channel. Wow, what an excellent day for trading. Today, what I wanted to do was to see how quickly I could get to $1,000 on the day. And because, as you know, with 20 trading days in the month, 1,000 times 20 is $20,000 in your pocket. So the plan today was to see how quickly I could get to $1,000. And I was doing it in the way I always do it, which is to watch our group of lines and moving averages on our specific instruments. And those would be, and trading ES, we're watching ES, SPY, SPX, NDX, Qs, NQ futures, VIX futures, and VIX. And we're watching our various lines, whether they be half gap, previous day close, previous day VWAP close, any number of pivot point lines, and the 100 and 200 EMAs and SMAs on various time frames. So let's get to it and let's take a look at what happened. I started out the day and I actually took a few trades, not right out of the gate, because I almost never trade in the first 5 or 10 minutes of the day while the instruments are getting over their exuberance. Because what will happen, especially on NQ, is that in the first 5 or 10 minutes of the day, if NQ flies up to, let's say VWAP or half gap or previous day close, or runs down to it, it will end up exceeding it out of exuberance because everybody's just wildly buying or wildly selling. So I do avoid the first 5 or 10 minutes, but here we are with a screen that shows after 15 minutes of trading, I had already taken a couple trades, and the thing that I want to draw your attention to is this average trade time, which is 28 seconds. And my longest trade time was 1 minute and 38 seconds. And that's key for my style because I want to catch these bounces, 100, 150, 200 bucks, and get out as quickly as possible and wait for the next A+ setup. So I took a couple of trades, took this snapshot, and then took some more trades and took this snapshot. Note the average trade time, longest trade time, and we're growing up to that $1,000. Took some more trades, and the next one, I'm creeping up on $1,000 using a couple where I averaged in. And you can see down here where I went in the red, I probably averaged in. So on this particular trade, I will have gone in with one contract, made 120. On this particular trade, I went in with one contract, made nearly 200. But on this very first trade, I will have had to average down. So I would have gotten in long here, and then gotten in with 2 more contracts long once it went against me a little ways. But anyway, here we are almost at the end, about 1 hour, just over 1 hour into the trading day, and I'm approaching that $1,000. And the last slide here, my net is 993, my gross is 1,062. And I've taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades. But anyway, let's take a look at the charts. So if this is one of the first times watching my videos, you may not know why I've got so many lines on my chart. If that's the case, I suggest you go back and watch some of the earliest videos, the workshop of the basics, and it's about 4 or 5 videos that will discuss the importance behind the 6 lines that are most important to have on your chart, which is the RTH open, the half gap, the previous day close, also the volume profiles, and that's the weekly volume profile and the day POC right there, pivot points for the day and for the week, of course VWAP and intraday VWAP, and then also very large moving averages. In green, you'll see the 100 EMA and SMA in dashed green. In orange, you'll see the 200 SMA and the 200 EMA solid. And then in yellow, or golden yellow, you'll see the 200 SMA and 200 EMA from the 5-minute chart as displayed on a 1-minute chart. And you'll learn that for trading ES, it's imperative that you watch ES, SPY, SPX, NQ, Qs, and NDX, and both VIXs, VIX futures, and VIX. And when you watch all of these lines on all of these charts, and you come up with convergences on multiple charts, where on this particular chart, something is happening at this area to cause it to bounce, and that is probably happening on at least 3 other charts at the same time. Not necessarily this yellow half gap, but some other significant level or pivot point or moving average where the algos kick in and they decide to initiate buying programs. So if you're not familiar with this style, go back, check below. I will list the videos that you need to watch below to familiarize yourself with this style of scalping. Okay, let's get on with it. So taking a look at the ES chart, what I've done is I've noted all of the actual trades that I took with a blue arrow and other trades that would have been optimal, but I did not take the trade, I've noted with a white arrow. And you'd say to me, well, why on earth did you not take this half gap bounce here and then again here? But I was probably busy looking at something else, and it probably bounced 4 or 5 points before I actually saw it. And by that time, it was too late to get in. I mean, if I'd known that it was absolutely going to run up to VWAP, it wouldn't have been too late to get in here. But my rules are that when I watch trading action come down to a specific line that I'm watching, I'll put a limit order down there and I'll catch it. And I didn't do that here. Now, here's a blue arrow sort of between VWAP and the pre-market open. And why did I take that entry there? Well, the answer is probably on SPY or SPX. So let's take a look over there. So on SPY, what happened was the market came down, it bounced on that first trade, it came down. These candles did not get down to this pivot point and to the yellow dashed half gap. So that may be why I did not take those entries on the ES chart. But then SPY ran up, reversed off of VWAP and intraday VWAP, bounced on this pivot line again to VWAP, and then rolled down and tested this pivot line again, and that's where I took an entry, and that's where I picked up another, I don't know, 150, 175 bucks. And as for that last trade, I was also watching Qs, NQ, and NDX. And on Qs, we had the market coming down, bouncing. It was not running up to VWAP, but it did come down and test this 200 SMA from the 5-minute chart as displayed on the 1-minute chart. And I've discussed that before. I set the length of this to 1,000 so that a 200 EMA which is down here in yellow, and the 200 SMA from the 5-minute chart can be displayed on the 1-minute chart. Anyway, here is that spot that coincided with my entry on ES and also what I just discussed from SPY. And those three things reinforced, and there's a red pivot line there as well. So those three things reinforced me taking that trade at 8:59 a.m. Central Time. Now on one of the next trades, you'll see that I took that bounce, got out, and then it bounced and broke through this VWAP, intraday VWAP cluster, went up to a couple of pivot lines, and then rolled over. And I expected it to bounce here on this VWAP, intraday VWAP area. So I took an entry here, and it immediately went against me. And when it got down to this pivot line, I added 2 more contracts, and then this next candle came all the way up to here, and I was able to get out with profit. I don't know what it was, probably a couple $100. And on VX today, there were a ton of supporting movement for our trades on ES. VX came out of the gate at the open, the blue cyan line, and ran right up to what you would expect would be a reversal spot at VWAP, which it did, but then it pushed on to this indecision candle of the pre-market. Very small candle just before an explosion off in the other direction. And we've discussed that in other videos. And then it rolled over and bounced here on intraday VWAP. And then it rolled over to the open and bounced up to this pivot where it was rejected immediately. And those supported some of my earlier trades. And here we are with SPX. SPX was interesting today. It gapped up because ES ran up overnight. And out of the gate, SPX ran right up to this mid-pivot line, rolled over to these pivot lines here, and I thought that it was going to work its way down to half gap, and did not. And once it established that this was and this is 3 pivot lines, there's a weekly pivot here, a mid pivot here, and a daily resistance line here. And it was dancing around this area, and then it put in this very, very small doji-ish indecision candle before exploding off in this direction. And I knew that if price came down and tested this area again, that it would bounce. It would bounce on the first touch of that area, and it would probably bounce if it got down to the bottom of that area. And in this particular case, it actually broke the bottom of that area before running on. Now, what I was doing was I was actually watching this on a 100-tick chart. And that's where I drew that box. I drew that box on the last little red candle prior to the explosion in the opposite direction. And I knew that if it came down and tested that, it would bounce, and it would probably bounce again somewhere in this area. And that's exactly what it did. And we can't forget our moving averages. We've got on SPX, we've got the 200 SMA and the 200 EMA rising from the previous day, rising, 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 crossing half gap, the yellow dashed line, and here we are in this area where price comes down and meets half gap, the 200 SMA, and the 200 EMA. One big giant cross here, And that's why I put that arrow there, because it signified an excellent opportunity for a bounce there. 54.03 to 54.14. So that's 11 points on SPX, which is 11 points on ES. And again, we're only looking for a couple of points. And as I've said before, when SPY and ES and SPX are bullish, and they roll and they roll and they roll and they roll, they may roll down to this gray dashed previous day close. And you can see right there from the previous day's action exactly where SPX closed on the day. And SPX came down to it and exceeded it, probably because SPY's or ES's previous day close was right here. So when you got an instrument such as SPX, SPY, and ES, there's a bit of a dilemma that you're faced with. Do you take a bounce on the first instrument that touches its previous day close, or do you wait for the last instrument to touch its previous day close of the three? But by this time, I was done trading, so I wasn't even watching it, to be honest. Let's go and take a look at SPY and ES, and maybe that'll tell us why SPX reached down below its previous day close before bouncing. And here we are with ES. ES did exactly the same thing. It came down, bounced on this mid-pivot, bounced on this mid-pivot again, and then rolled down hard and went through previous day close and then bounced hard. And again, sometimes the market, out of exuberance, will simply blow through that area because they know that there are a large amount of buying orders sitting right there with their stops, so many points below. And the market sometimes decides, well, we're going to capture the entries on all of those players and we're going to stop them out, create liquidity, and then take it for a run. Let's take a look at SPY and see what it did there. And there's your answer right there on SPY. It was SPY that decided that it was going to be the very last line of defense. And as it rolled down off of these pivots, bounce, roll, and at this point on ES and on SPX, the candles were a number of points below its previous day close. And yet, here we are with SPY, and SPY is the last of the three to touch its previous day close, and the market bounces strongly at that spot and decides that it's not going to trade into yesterday's trading action. So that's all I have for today. I forgot to ask you, hey, if you enjoyed the video, please give me a like and subscribe if you want to be notified of upcoming videos. And also, let me know in the notes below, in the comments below, if you'd like to see me live stream my trades. I think that is something that might help me be more meticulous about the trades that I take if I'm being held accountable by a group of people that are watching me. And it may help you see what I'm seeing as I'm seeing it, and as I'm calling out the action to help you adopt this type of trading strategy. Anyway, again, that's all I have. Thanks for watching. Have a great day.